Hi, I am Angelica Arana from Mexico, and I'm very happy to be part of this global edition of Open Banking Week 2021. Today, I am going to talk to you about what is happening in my country with open banking after 3 years of the FinTech law. In March 2018, Mexico published its FinTech law, which establishes the regulatory framework of two main types of financial technology institutions: the collective finance institutions, also known as crowdfunding, and the electronic payment institutions, or wallets. In addition, the law establishes a regulatory sandbox and provisions for open banking. Unlike other countries such as the UK, where open banking applies only to the major banks, Mexico went on to the next level, applying this principle to the entire financial system. This represents more than 4,000 financial entities. For this reason, in Mexico, instead of open banking, we speak of open finance. All financial entities explicitly mentioned by the FinTech law are subject to data sharing requirements, as are money transmitters, credit reporting agencies, payment switches, and financial technology institutions, as well as companies operating under a sandbox approval. As can be seen, the regulatory framework in many territories, including Mexico, is adapted to encourage new fintech business models. The strategy toward open banking depends on various factors, like market dynamics, regulatory readiness, innovation, and so on. The different approaches, each with their pros and cons, results in multiple outcomes in the market. In Mexico, like I said, our driver was deregulation. According to the Open Banking Readiness Framework, Mexico is in the embryonic quadrant, moving toward to the pioneers one in the market side. Brazil, on the other hand, is in the transformers quadrant, with a leadership position both at the market and regulatory field. It is important to say, this framework does not reflect open banking adoption. It just determines the preparedness in terms of regulatory capabilities and market dynamics. Open banking is also known as open bank data. It is a banking practice that drives new business and digital ecosystem through external partners and providers, the third-party providers, or TPP, using APIs provided by banks or any other financial entity. This practice means sharing financial information electronically, securely, and only under conditions that customer approves of application program interfaces, APIs, allowing TPPs to access financial information efficiently, promoting new apps and services. Ideally, open banking should result in a better experience for customers through an emerging ecosystem of apps and offerings from fintechs and financial institutions to empower users. Open finance and open banking is an opportunity for people and business to use their transaction data to access better financial products and services. It opens the way to new products and services that could help customers and small to medium-sized business get a better deal and access financial credit. It could also give us a more detailed understanding of our accounts and help us to find new ways to make the most of our money. Since its beginnings, open banking has put strong market incentives and regulatory nudges for banks to become modular, focus on economies of scope, and consider creating business ecosystem as part of their future strategy. Having said that, we can see here an evolution framework that requires openness of different categories and at different levels. And this path has already been followed by financial and non-financial institutions. By law, Mexico is in the way of open finance, allowing open products in financial marketplace, open process improving the business process by enabling data and capabilities sharing between banks and digital enterprise, open innovation in collaboration with startups, offering them support in infrastructure, operational data, etc. And finally, open models, like banking as a service or payment as a service, enabling banks to embed themselves in emerging platforms without taking the risk of the entire innovation lifecycle. In practice, we are just taking baby steps into APIs in banking by compliance with the secondary regulation of fintech law. So far, we have talked about how in Mexico the open finance provisions require financial institutions, including banks, to develop APIs with common standards for sharing data with other financial entities. The fintech law foresees API standardization with secondary law setting out the technical details. Fintechs and financial institutions do not carry a special obligation, nor do they require accreditation to share and receive data over APIs beyond the compliance with the API technical and security standards. APIs are the pillar of the open banking principle, adopted in multiple jurisdictions to foster competition in financial markets. In Mexico, the Article 76 of the FinTech law identifies three types of data. The first one is the non-confidential financial data. I mean, financial information about products and services, plus the location of access points. The second one is the aggregated statistical data. And finally, the customer transaction data. This last category requires the explicit consent of the client. The main point lies in the fact that the data are clients' property and financial institutions have only been the custodians of this data. Therefore, open finance will obligate financial institutions to share their clients' financial and transactional information with other institutions, as I said, only with the permission of the data owner. Data consent and protection has been the elephant in the room for many financial institutions, mostly because they have traditionally viewed the protection of the client data as a responsibility rather than an asset to be commercialized. But this gatekeeper role is a thing of the past, and now we must allow clients to directly authorize sharing their data. And if the data is done well, it can actually increase data security through identity validation and fraud detection. The first generation of personal financial managers, the PFMs, also known as accounts aggregators, require you to provide the same user and password you use to log into your bank account. Then the app would be free to screen scrape, to pick and choose the information it needed from among all the information it had at its disposal, and take this information and give you information by category and helps you to see what is happening with your finance. But that was cumbersome and unreliable. APIs, on the other hand, give apps direct access to the exact files of data needed, your account balance or specific transaction details, no more. And the important thing here is you don't need to tell anybody your password. However, today, the standard for such API, I mean the transactional API, are yet to be formalized by the regulator. The FinTech law does not set out the stages implementation. Still, de facto, it is happening that way. Public data were released before customer data. And so far, the standard for ATM's open data is the only one published by national banking and securities commissions. This happened a year ago in June 2020. And the banks will be obligated to provide this data next month. As the next step of the regulator, we expect by the end of this year the regulation of the API standard for transactional data. With the ATM Open Data API implementation in Mexico, the National Banking and Securities Commissions is expecting that banks have enabled the technological and human capabilities to support future data openness needs. Based on this assumption, the regulator considers defining a shorter implementation times for banks to add the following mandatory APIs. But this assumption is not necessarily being fulfilled since each bank has its own reality. Other thing that is essential to say is that payment initiation is not part of Mexico's open banking regime. However, this type of functionality may be possible in the future if Banxico, our central bank, defines a payment API allowing money transfer between Mexican banks using the SPAY highway. In this open finance journey, Banxico, the Mexican central bank, issued the secondary regulation 2/2020 for the exchange of data by credit reporting agencies and payment switches. This regulation set forth the standards for the interoperability of APIs used by financial entities, as well as for determining the technical information for such interoperability, but deals only with the exchange of open and aggregate data. They are not seeing the transactional data so far. The FinTech law defines the data providers who are obligated to establish APIs in order to share open data, and the data petitioners, those who can ask for access to this data. In this last category, the data petitioners, there is a crucial difference to say. For open data, everyone who wants to access to this public data is authorized by default. But for transactional data, it is necessary to be approved by the regulator and added to the authorized entities database. The great challenge for the regulators is the generation of guidelines that contemplate the capacity to continue innovating without losing sight of the security and privacy measures of the information and the fairness between participants. Embrace an open finance ecosystem could benefit all financial system participants in several ways. For example, financial institutions could reach a new sector of users by indirectly using data sources that were not available before to assess clients' feasibility. Also, they could design and offer tailored services to their users through third parties and make better use of currently available technology to improve customer experience. Similarly, by working in partnership with financial institutions, non-financial third parties could expand their range of services and reach many users. Moreover, these firms could attract more users to their core business platforms by providing financial services, making them even more beneficial to new users. In my opinion, embedding financial services on the platforms of recurrent service providers would allow more users to enjoy the benefits of open banking. And hopefully, this will impel financial inclusion because half of the population in Latin America has not access to financial products. Even LATAM has made extensive progress in increasing access to finance last year. There are still many areas that could benefit from open banking, digital solutions, and collaboration. But where are we in Mexico? As the secondary regulation for open banking has advanced slowly, the market pushes banks to offer API products to third parties voluntarily. Remember, the Fintech law was published 3 years ago, and by now we have only one mandatory open data standard. That's why industry practitioners are adopting different combinations of open APIs, the public one for everybody access, the protect ones to partners and customers, and the closed and private ones for internal uses. Lately, we see some Mexican banks adopting both partners APIs and open APIs to expand their business model and explore new sources of revenue. The matter at hand is how Mexican financial institutions are undertaking the challenge. Are they technically and operationally ready? Do they have a clear strategy to play to win in this new open field? Are they aware of the value offered of the new players? I don't have the answers, but I'm sure not all banks are advancing at the same speed. But the path is setting, and we will see what happens over time. I really believe it is fundamental to prioritize a business approach over a compliant approach, identifying opportunities to capitalize on the effort made around the initiative to minimize customer friction and offer them a better experience. As the world goes through more and more technological disruptions, it becomes important to create the tools that will guarantee a successful and inclusive future now. And the APIs are extremely powerful integration tools. As I said earlier, open banking has pushed banks to become modular. And we have here different ways of doing that. In an integrated market structure, major products providers own the full value chain, including the customer relationship. With modular demand, providers no longer have the strong relationship with the customers. Customers instead access a wide array of product providers via intermediaries or directly from multiple firms. In the modular supply structure, firms may have powerful brands, but they do not operate at all the supply chain that deliver the product. In a full modular market, customers use multiple use suppliers and production is vertical unbundled. The question is, what role wants the financial institution to play? With open banking in Mexico, like other countries, the new shape of the industry is emerging and it is modular. It will be more transparent and efficient. It will drive business to the best-in-class suppliers and greatly benefit to customers. It will drive business to the best best-in-class suppliers and greatly benefit customers. With all that has been spoken, it comes to my mind the phrase coined in 2006, data is the new oil. 15 years later, it is more true than ever in a post-pandemic world with all the digital transformation advance. Banks, fintechs, and technology providers have the unprecedented opportunity to participate in and accelerate this transformation journey. Financial institutions have to evolve from managing money and enabling transactions to manage data and enable interactions. In Mexico, some banks already play a marketplace role for API products, which allows them to evolve to open banking as a service role very quickly. This role is usually playing for global banks, but it's not a rule. We have seen small and medium local banks that are doing a very good job over open data, APIs, and open models. But many banks are barely beginning the transition from the legacy bank role to the open bank. In order to have success in this journey, banks must develop the fundamental capabilities to evolve from being this legacy and obsolete bank to become an ecosystem bank and fully exploit the potential of open finance and the open economy. We can see here several capabilities that banks could develop to scale up from obsolescence to the new horizon of financial services. Meanwhile, I have to say that Brazil has displaced Mexico in the leadership of open banking in LATAM. Chile, Argentina, and Peru have already a regulation on open banking in progress. And recently, we have heard that Colombia is joining the list of countries that are exploring their approach to open banking. Open banking is a phenomenon that is empowering innovation in financial service globally. While many developed economies have taken a jump start on the initiative, developing economies are stepping up the game to bring forth the next dimension of the innovation. Open banking has the potential to transform bank services and banks' business models. In fact, it's already reshaping the financial landscape around the world. Simultaneously, it's producing a revolution and an evolution in the financial sector. We need to follow very closely the use case adoption and learn from the pioneers. In this open finance global movement, the angular stone, in my opinion, will be a collaboration between countries. We have the great opportunity of being part of this amazing time and make history in the financial sector. I really believe we have the chance to do something extraordinary. Thank you for having me. Let's enjoy together the Open Banking Week. I hope you are staying safe and healthy. See you around.